All right, I'm going to show you guys one of my favorite strategies that I like to use for trading trending markets. And this is a really easy strategy, really simple. All right, this is nothing hard. Like I told you guys before, this stuff doesn't have to be hard. The thing is, on the internet, there's just a lot of oversaturated material focusing on indicators and things like that, which is, there's nothing wrong with that. But at the end of the day, um, eventually you're going to want to learn how to trade the markets, and you're going to want to know how the markets move. So today I'm just going to show you guys a um, really easy way to trade the markets. Now, as you guys may know, the markets, especially the forex markets, they move in wave patterns. Okay, they go up, they go down, they go up, they go down. They move in wave patterns. Okay, so the idea that you want to have is you want to be able to catch these waves. Okay, you want to enter on the trends. Okay, and kind of go with the momentum of the market. So basically, the market won't just go in one particular direction. It won't just go in a straight line. It's going to go up, and it's going to come back down to give the traders an opportunity to get in on the movement or the action or whatever. Okay, so one of the things I like to do is I like to just get an idea of what the market is doing by looking at the overall trend. Now, I'm going to show you guys a little trick. Okay, a lot of the times on these charting platforms, by default, they the way that they scale the charts out, it can kind of give you a bad visual of the market. So, for instance, right here in this little area right here, we can see there was kind of like a little breakout going to the upside. And the average trader, the average person will look at this and say, okay, the market's probably going to come down. It's probably going to make its way back up here and then come down or something like that, right? And that's what the average trader would say. So I'm going to show you guys a little trick that you need to do. It's very important that you do this on your MT4 charts. Okay, you need to go over here on the right side, and you need to just simply start at the top, and you need to just hold it down and scroll down like that. Okay, you need to scroll down on your charts like that, so that way you can have the real visual of the market. Now, if you look at it like this, it doesn't look like it looks like the market could actually go higher. It looks like there's a lot of room for it to go higher, and that's the psychological thing that you need to see. Because when the charts were like this, it kind of just blew it up a little bit, so that it really doesn't look like the market can go any higher. It already did a lot of action. But if you scroll it down like that, you can see that the market actually actually has a lot of room to grow. All right, but anyways, this is the strategy that I'm going to show you. So you go to your chart. First thing you need to do is find out what is the trend. Obviously, this market here is kind of sideways. It doesn't really have a real trend direction. Okay, so I'm just going to leave this market alone, and I'm going to go to another market. By the way, I'm on the 15-minute chart. You can use this on any time frame that you want, but me particular, I find this to work very well with the 15-minute chart, simply because you can reduce a lot of those noisy random movements in the market. Okay, that tend to happen on the lower time frames. 15-minute, it still happens from time to time, but it definitely minimizes it. Okay, so 15-minute is perfect for people that don't want to wait all day for a trade setup. All right, so what I want you guys to do, remember to always make sure that you scroll down on your charts so that you can see the overall picture. All right, so the market is obviously moving in an upward direction here. Okay, we can see that our moving average is kind of sloping up, and overall the market is just kind of making its way higher like that. All right, so what we want to do is we want to use our horizontal line, and we want to just simply look at the market. You see, I don't have any indicators on my chart. It's a clean chart. What you want to do is you just want to mark all of the resistance levels. Okay, all of the obvious resistance levels. And the reason I'm saying resistance levels is because the market is in an uptrend. So in order for us to enter into this uptrend, then we need to pay attention to old resistance levels that is going to act as new support. Like I told you guys before, the market moves in waves. It goes up and it goes down and it goes up and it goes down. All right, so the obvious resistance levels for me is here, maybe here, and right around here. Okay, not too difficult, right? This is something that everyone can see. And the reason I'm telling you to mark all the obvious levels is because the rest of the world, the rest of the trading world can see these levels as well. And as we know, the market, for the most part, is driven by human traders. So there's a lot of psychological points in the market that the majority of traders can see. So there's a higher chance of a reaction at these levels. So that's why we're not going to be paying attention to the minor levels. We're going to pay attention to the obvious levels. So what we want to do now, since we've marked our levels, you can see the market is right here, and it just recently broke through this previous resistance level right here. Okay. Now what we're going to wait for, we're going to wait for the price to make its way down as it did. We're going to try to get a little bit closer to that level. Okay, so if the market can kind of come down just a little bit more closer to this level, then what we're going to do is we're just simply going to look for a buying opportunity from that point on. Okay, we're going to look for the market to go bounce off of this level here and continue higher with the overall trend. Okay, very simple, guys. This is stuff that the professionals are doing. You know, the institutions, they're not looking at these tiny little levels in the market so often. If you want to catch these big movements in the market, you want to make sure that you open up your charts as far as you can go. Scroll down on your scale here so you can see the overall market. So anything looks possible. You get what I'm saying? So you don't want to ever think that the market can't continue higher because you have your charts scrolled all the way up and it doesn't look like it can go higher. If you scroll your charts down, you can obviously see that this market can easily go higher. Okay, so that would be where we would want to enter on our buy position. Now, me personally, what I would do, I love trading this type of strategy on Nadex, because what I can do on Nadex is I can just do an in the money contract, give myself a little bit of breathing room, a little bit of cushion. So, for instance, on Nadex, I would look for a 2 to 3 hour contract expiry. Okay, 2 to 3 hours, maybe, you know, around that range. Okay, 2 to 3 hour expiration. When it comes down here, I'll be looking to do an in the money buy contract. So what that means is I'm buying a little bit of insurance, a little bit of cushion. So my order would probably be around here somewhere. And I'm saying that the price will stay above this level. So I would probably risk anywhere between I don't know, $15 to $25 for this trade. Sorry, 75 to about $85 for this trade. Okay, that's just for one contract. So the profit potential will be between $15 to $25 as far as the profit. But I would typically do at least 10 contracts. That's just for my account size. That's just to kind of make it worthwhile. I would probably do between 10 to 15, maybe even 20 contracts, so I can make the trade worthwhile. All right, so I'm buying a little bit of cushion there. So I'm just gonna show you guys another setup. All right, let's see. Okay, here's another market right here. This is the British pound dollar. I am on the 15-minute chart once again. And what I did was I just scrolled out of my charts all the way as far as I can go. And I can see that the overall market, if I look from left to right, I can see that the market is in an uptrend. It's an overall uptrend. That's all I care about, guys. I'm not trying to predict the market anymore, okay? We're not going to try to do that anymore. We're just going to go with the flow. We are the small fish of the market, We don't have any control over this. So what we're going to do is we're just going to follow the big fish. Right? Now, what the big fish are doing, they're evaluating the market. They're getting in. They're pushing the market higher. So what we need to do is we need to find these levels, the best time to get in on the market. Once again, go to your right if you haven't done it already, and make sure that you scale out of your charts. Scale down on your charts so that you can see a better visual of the market. Once again, we take our horizontal tool, and all we're going to do is we're going to mark the obvious levels of resistance, because we're in an uptrend, so we're looking for resistance. If we were in a downtrend, we would be looking for support. So, obvious level right here. We have an obvious level right here. And if we can see, that the price recently broke above this level, and now it's coming and it's on its way back down, and it actually touched our previous level of resistance. Okay, so it actually touched this previous level of resistance. And now what it's going to do, what we're expecting it to do, is to reflect off of this level and continue higher. Okay, that's what we're expecting it to do. So what we're going to do at this point, now we can go ahead and zoom in on our charts. Go ahead and zoom in so we can get a little better visual. Okay, and we can already see that the rejection is already starting. Okay, so what we're going to do is we're going to just simply hop on our Nadex platform, and we're going to find the binary GBP, and it's currently 3 p.m. right now. Not the best time to be trading, but I'm going to go ahead and just select an expiration for 5 p.m. Okay, just as an example. So that's about 2 hours out. And what I'm going to do is I'm just going to look for a strike that's currently in the money. Now, since it is further out in the day, afternoon, market is going to be closing down soon. So we're not going to get the best expirations, but just as an example, I'm just going to select the in the money contract. Okay, and this in the money just basically means that I'm buying a little bit of breathing room. Okay, so the market has to go down to 1.5282 before I start to go into negative territory, before I start to consider exiting the trade. So 1.5282. So I'm just going to mark that on the chart so we can kind of see that where that is. Let me just open it up here. 1.5282, and I'm just going to make this a different color. Okay, so the market has to fall below this level right here before we can even consider exiting the trade. Now, if we zoom back into our charts, we can see it kind of looks like further down, right? And we are on a 15-minute chart. So that's basically where the price has to go before we even consider exiting the trade. So I'm going to go ahead and just place the trade right now. I'm just going to do 20 contracts. I would not recommend investing that much money on the in the money contract. As you can see, there's not that much premium left on this trade. Typically, you want between $15 to $25 profit potential, and that clearly wasn't the case here. But just as an example, just to show you guys, this is what I would do in the money contract. Okay, and actually, this contract here is actually in the money as well, because the price is actually above this current level here. So technically, this isn't in the money contract. It's just a little bit closer. So I'm just going to just do one right there too. Just do 10 contracts for that. Okay. And that's it. So our open contracts are here, and we have until 5 p.m. and we're basically stating that the market will stay above this level here, or whatever let me see where our other contract was, 5292. So let me draw another level. 5292. So we're basically saying that the price is going to stay above this level as well. Okay, like I said, this one's a little bit closer to the underlying market, and typically, you know, you want to give yourself a little bit of cushion. So this would be during normal trading hours, this would probably be the best thing to do, and you would probably get a pretty decent risk to reward on that, okay, as far as in the money. All right, so we're basically saying that the market is going to continue higher, right? Bounce off this previous resistance level, and it acts as a new support level, and we're just following the direction of the overall market. Okay, it doesn't get any easier than that. Now, as far as our risk management, you want to make sure that you keep an eye on these trades. If the market does so happen to fall below these levels or come close to the levels, then you want to make sure that you monitor that and you go ahead and open up your contract and hop out of the trade. If you're buying the market, you want to sell it back. Okay, if you're selling the market, you want to buy it back. Okay, and that's it, guys. Very simple strategy. We don't have to make things that much harder than it needs to be. Trend following strategy, just following the wave patterns and the natural movements of the market.